Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scout, and jumping into the charts on this August 17th. The Fed minutes were released today and there was wild price action. In this video, we're going to be discussing the S&P, the NASDAQ, the IWM, hitting key resistance levels and looking to potentially start at least moving lower in the short term. But overall, congratulations on the profits today, the day trade wins, which we executed. I believe we had 3 day trade winners today. Obviously, we held FUBO overnight last night and closed it out today for a beautiful win of 12.9%. So congratulations. And then we covered our BBY. So that was, Bed Bath Beyond for a beautiful 17%. And then honestly, we also covered this morning or yesterday we covered the BBY for 19.6, and then late this afternoon I also shorted BBY again, and we covered it for 14.6%. So Bed Bath Beyond has paid us 3 times in the last basically 24 hours of trading, which is a phenomenal job. Double-digit gains all on the day trades means that's a huge amount of profit. That's the beautiful thing about day trading. Sometimes you get these opportunities where, we're looking to hit, pretty much 10 to 20% winners on our swing trades, but that's holding swing trades over, say 2 to 30 days. And honestly, the fact that we could hit double-digit returns on a day trade position where we generally enter in with a way higher amount of money in that position, and we hit double-digit gains 3 times within 24 hours, truly exceptional. So congratulations on those profits with us. That has propelled our day trading account in terms of heading in the right direction. Now, overall, I don't really issue day trade alerts, because it's very fast-paced, but I issue the ones that I think have a very strong potential, the strongest potential of playing out in our favor, and that's what has transpired over the last couple of days. So jumping into the S&P 500 here, you can see that we had this gap down this morning, and then you started to trickle, made a new low, had a little bit of bounce, another low, tried recapturing the previous, pivot, and then you ultimately ended up making a new low before the Fed meeting. And then once that 12 o'clock volume hit, you just started floating up, was testing all of these major pivot zones here. And this is when the Fed minutes were released and nothing really new transpired. It was kind of a fake out in my sense, and it was a really good technical fake out because we filled this key gap over here. I'll just draw a simple trend line across there, and you can see we filled that gap to a T, which is pretty awesome to see. Gap filled, and now it makes sense that the charts can now continue to move down because we still do have, I think, around 8 gaps to the downside on this chart. So overall, we have a new resistance line. Before I draw that in, you can see that we were trading in this wedge formation, and this trend line pivot goes pretty far back there, and then you have this downsloping trend line, pivot to pivot to pivot, which we gapped over, broke. Typically, you do get a retrace back to the breakdown zone, but I think it's very unlikely at this point due to the fact that the markets are still so extended. You had that gap zone, which is kind of your retrace zone, and now it's ready to move on. And it looks like this is creating an inside bear flag pattern that should break lower. Honestly, you do have some support over here, which you've tagged already, so it's unlikely that you're going to get another technical bounce off of this level since it is weakened. You do have a secondary support zone over here right underneath it, which we may get an intraday bounce if you basically went in a straight shot from this bear flag pattern down to there. You could get a small intraday bounce, but I do think these markets head a lot lower. Simply if we remove all of those trend lines, or just keep those in for now, we will have a clear resistance trend line over here, and I actually want to draw some parallels for all of you. So if we take this low to this high here, and then we just drag it up, you can see that it pretty much makes a perfect parallel line. So I'm just going to darken up that. So you can see we do have a downsloping channel now. I think this is going to be key in terms of giving us credible and highly probable support levels on the way down, as well as resistance levels on the way up. So I do think that this channel will continue to break to the downside at some point in time, but this market won't go down straight away, especially if the volume does not pick up. Let's just remove all of those trend lines for now so we can get a clearer picture on the daily chart. So if we look at the daily chart, you can see that we've tagged resistance as well as the 200-day moving average. Volume has been slowly starting to increase, but still very light, 63.4 million shares on the SPY today. And the beautiful thing is that we could not hold and close above that 200-day for confirmation. We actually sold off and made a new lower low and almost took out this bar, but we managed to be saved in the end of the day. At the downside, I think we have to trade down to this 411 mark at the minimum to make sure that the S&P has a potential of going higher. Overall resistance has been hit. Clearly a sell-off. Look at the QQQ. QQQ was also weak today, down basically 1.14%, but it did close off of its lows. So clearly there is still some buy the dip momentum, which in my opinion, I'm finding it very shocking. But I do think as the markets continue to fall lower, more and more people will become a little bit nervous and start to sell their positions instead of sticking around to buy that dip. IWM is obviously a leading indicator, and one of the key importance of the IWM is that you had the IWM close above this 200-day for 3 days in a row. So you had it here, and then you confirmed a breakout on a technical basis. But the fact that this is now closing back within it almost negates this confirmation, and it was really a weak confirmation because you had no volume over here. So it's one that you have to analyze with great suspicion, and that's certainly what we're doing here. But considering the Russell again is closing below the 200-day moving average and was down the most out of the indices, is really showing you that the small cap stocks, the true breadth of the economy, the 2,000 companies, are really starting to show weakness, and that's kind of what took the markets down initially on the first leg. And that's what we could see again. We've had many of these names like Carvana, SE, SoFi, Upstart, Net. All of these companies have had terrific bounces off of the lows, and I do think considering rates are still moving up in the environment, we're supposed to be starting QT in September. Around 90 billion between mortgage-backed securities and treasuries is supposed to be rolling off the balance sheet, and then as that rolls off the balance sheet, there will be about 10% of that rebought. So realistically, we're probably going to be looking at somewhere in the range of 80 to 85 billion that rolls off if they stick to that in September. So September 1, that starts QT, and we'll just have to see how the markets take that. I think people tried hoping for a pivot that is not likely to come anytime soon. And certainly the signals that I'm watching, I think people were getting a little bit overzealous in terms of hoping so much. But IWM is a leading indicator because it does have a true broader barometer of the whole economy. If we take a look at gold, gold was under pressure today. Look at gold heading back inside of our bullish consolidation. So the fact that gold has now not been able to hold the 50, you've had 3 pretty hard days of selling in gold. So I do think in the short term, since you are coming into support, you will get some sort of a bounce. The question is, I don't know how big that bounce is going to be. No one really does. But with options expirations, because it looked like gold was going to break out, many people were buying calls. But now, typically, if you look back through history, gold has a very strong correlation to moving in increased volatility across its historical averages when options week comes rolling around, just because there's so many futures contracts. And if you think about how many futures contracts can be dumped onto the open market within a minute, there's no way to mine the amount of millions and millions of contracts that funds can dump and manipulate and buy within a split second or 30 seconds. It's impossible to mine million ounces of silver within 30 seconds, or a whole year's worth of silver gets dumped onto the market in one day, and that happens in these precious metals market. But overall, short term, still technically bullish. I don't mind this pullback. It will give us some steam if gold can catch a bid to actually have a very strong run up and piercing and taking out this 1805 resistance. So let's just continue to monitor this and see if we hold this support level. If we crack through it, often institutions do like to pierce it. You still have it very close proximity to this one, and you'll have to keep in mind that you need confirmation to close, 2 days of confirmation to close below this parallel channel. Let's take a look at oil. WTI is weak. You're starting to consolidate. It's still premature in terms of a bear flag. You can still have a bounce off of this level since it is support, but odds are that the energy markets are kind of pricing in potentially a recession, or maybe this is just simply due to the fact that the SPR has been flooding the markets with oil that has been strategically, accumulated and saved over the years. So, which is kind of a way of basically stimulating the economy in the short term by lowering oil prices. Let's take a look at natural gas. Impressive move. I was a little too slow in the pre-market. I was managing a couple other positions in the pre-market, and I did not get to see the natural gas float all the way up to this double top, picture perfect zone. Look at that retrace. So that is a thing of beauty when you have that double top. Now, generally, I thought you would have got a retrace or a pierce of that double top just because of the strength in the overall market of natural gas. But clearly, I think the top is in for natural gas. Clear double top with a daily topping tail confirmed today. And when you look at it, it did have a significant volume count. So the fact that you had a volume day with a reversal topping tail at double top is pretty strong factor. It's actually a very, very deadly combination to signify a very, very likely near pullback. Now, typically you can get a retrace. So this is what I'm going to be looking for tomorrow. I'm going to be looking for natural gas to potentially have a retrace. If we get a retrace of, say, 50% of this wick, or perhaps it could be right around here, basically this previous pivot over here around 940, then I may look to add to my KOLD position. I will have to wait and see how the setup comes, but that's kind of my thought process. Sometimes you get a retrace, but since we do have a daily reversal topping tail over here as well as over here, and you have one over here, on volume, that does signify that the likelihood that the top for natural gas is in. And when you look at the downside, it's got quite a bit of downside potential in natural gas. If I simply take this channel back there, let me just adjust this channel because it's kind of off right now. So if we simply take that parallel channel, it can show you that natural gas could potentially fall back to the 650 to 630 area over the coming, weeks to months. So that'll be just really interesting to see if that can happen in terms of the price action. And it's certainly possible. Overall, there's a couple new trades that we did. SNY, so Sanofi. So Sanofi is an interesting one. I'm going to go to the intraday action. So Sanofi, we issued an alert to pick up Sanofi today. So one of the reasons I issued an alert to buy Sanofi right around this 41.63 mark was because this type of pattern, this is creating a bull flag in the upper range. And it was a little nerve-wracking when you had this 3-bar surge dip to the low, but then you completely engulfed it with another reversal candle, which signified that the bullish momentum is still on a technical basis. And look at this surge. This bullish consolidation led to a magnificent surge, and we're already in the money, basically, 1.28% from our entry. So that is lovely to see. You do have a pretty strong intraday topping tail over here, but nonetheless, I do think that Sanofi has been beaten down to a pulp. It's a pharmaceutical company. One of their drugs has been tied up in some sort of a dispute, but that's been across the whole pharmaceutical industry. And I actually know someone that works at this company, and basically they have many drugs in the pipeline that can support the business model, let alone this other drug that's kind of being caught up in all the news and options X shenanigans. So a tremendous company. They are a household name. They are a real company that produce consistent money after money after money, and honestly they're into massive support. Look at this retrace, pivot to your breakout zone, your impulse move to the upside, to another pivot zone, and look what you hit today. You pierced that pivot. It looked like on a technical basis you were going to be breaking that level and heading much lower. That's what most people think, but that's the importance of waiting for the confirmation signal. So honestly, now you have basically a beautiful daily bottoming tail on volume. Super, and coinciding with this previous breakout over here, this previous volume candle over here, and this move surge up. This was just basically headline rumors and, in my opinion, BS that drove the company down again, so that people had a second opportunity to load up at this huge massive level where you can clearly see massive accumulation. and that is just an exceptional opportunity. And what's one of the reasons I love that is, if you see, this is just going to be a little bit of education, along with the bull flag education there, just analyzing this pattern over here, this beautiful 3-bar surge, tight consolidation, and then your move up. That is typical intraday bullish consolidation reversal signal. And then when you take a look on the daily chart, whenever you see an influx of buying volume, and when you have a complete reversal which closes inside the previous candle, that is already a bullish signal that is a terrific level to be buying at. If for some reason in the near term you can get a quick retrace back to that same initial level where you had millions and millions of additional buyers come in, that would prove to be such an extraordinary opportunity. And we actually have a better entry than basically the 8 million shares that were exchanged there. So truly wonderful job at executing that trade. I do think that Sanofi at the minimum has a very strong potential to at least get up to this orange line, would net us at least 10%. That's your previous pivot over here, and I do think it could even rally farther than that. Just due to the fact that sometimes pharmaceutical companies, since they are the necessities, they can be more defensive in mind as the indices fall, and be a little more resilient if the S&P 500 falls sharply lower. So that's pretty much it. I'm just going to take a look at Apple, show you how extended Apple is. Apple is just getting out of this world crazy. So we actually added to our Apple short here, basically at this gap fill, and you can see that Apple pulled in a little bit. It looked like it was trying to make a run. It's pulled in and closed basically where we shorted again. So that does increase our average to, I would have to find out on my chart, but we're probably in the low 160 area in terms of our Apple short. But look at this incredible run for the magnitude, and this is what clear bear market rallies. Just like Apple made a record here in terms of, I think it was 11 consecutive up days, the vertical degree and nature of this move led to even a sharper downturn. This type of sharp increase is not a healthy bull market. Even if we look at the bull market of, say, when there was fiscal monetary stimulus piling in, this is your 2019 run. Sure, Apple had a really strong run, but there were some mild pullbacks in there. But when you look at the type of run that Apple has had, this was your big initial fiscal stimulus, but you still had these massive pullbacks, boom, drop. And then you had this massive chop. Still, there was 120 billion coming into the system. Massive chop, massive chop, massive chop. The angle of this move, we can actually measure that, is a lot lower. So if you take that degree, that's like a 17-degree angle move. If you want to do it a little bit higher from, say, this pivot, that's basically a 38-degree move. Obviously, this move over here is a lot more, but the difference is that this move was when there was massive amounts of fiscal support coming into the system every month in the amount of 120 billion. Now that is supposed to be coming to an end, and it's supposed to be starting September. But look at the sheer degree of this move. This is basically a 60% move. I mean, if you take it from this major pivot over here, it's just gotten steeper and steeper. So it's a 65-degree move basically Apple has had, which is just truly exceptional. And you can see it's even steeper over here because it keeps going away from us. If you take the next major pivot, that's a 70-degree move. So truly remarkable in terms of how powerful this move has been for the sheer size of Apple. And this is one of the reasons the market has been staying afloat, is because Apple has just been a powerhouse. And the interesting thing is another little bit of an education. When you take this pivot low over here to this pivot high over here, it's basically a $44 move. When you take this pivot low over here to this pivot high over here, it's basically a $45 move. So it's almost a near perfect measured move in the amount of dollars that it is traded to. So the odds are, look at this type of move. You had a sharp pullback, you had a secondary double top retrace, and then you had an even sharper decline. But Apple's the type of stock that gets technical bounces just due to the sheer size and institutional players involved in this company. But the resistance is on, in my opinion, and I do think due to the fact that you have gap fills over here, top of this resistance parallel channel, measured moves in play, the S&P's hitting major resistance, many stocks are hitting major resistance. The fall is coming to an end, the summer doldrums should be coming to an end near the beginning of September. You have QT starting September. I do think there's just so many catalysts now on the horizon. You have a bunch of economic data coming out of Europe. You know, England's inflation rate increased again. So lots of things have to be accounted for. And I do think the fact that people are hoping that this market is going to make new highs, and potentially Apple could, but it's certainly looking like the bond market is now pricing in higher yields. And that's why we sold our UBT. That's why we got out of it. Just something didn't sit right with this head and shoulders pattern. Maybe it's because I didn't like the right shoulder. Maybe it's just because of, intraday cross-connected market analysis. But overall, we got out of it, and it looks like this US 10-year is trying to make another run up to at least the 3% mark. And that would certainly put a tremendous amount of pressure on equities. This would probably raise the US dollar as well if that continues to rise. Now, you do have this reversal signal still from yesterday, so you have to get through that and close above it to negate that. But certainly if yields push up, then that will inevitably give the power of the US dollar a chance to go up. And the interesting thing too is that when you look at the US dollar, it has been, whenever the US dollar has surged more than 15%, 9 out of the last 9 major crises since 1980, so basically a 50-year period or a 40-year period, 42-year period, a dollar that has risen over 15% has 100% led to some sort of crisis. So that is kind of what we're prepared for. I do think we're going to see that with the dollar surging and being so tremendously strong still will put pressure on emerging economies and economies around the world, which will inevitably have a global slowdown impact and potentially create some sort of a sovereign debt crisis. But short term, it looks like yields are trying to confirm and get that breakout. Let's just continue to see if they power up. We're certainly positioned for them to power up. So that is kind of what I'm looking and wanting to see. Stay tuned for more chart action. Hope all this analysis helps. Congrats on the profits today. And please give this video a big like down below. Again, let's stay patient. Let's stay vigilant of all of the fundamental factors that the charts are telling us, that these stocks are overbought on all types of metrics, and with the yield curve inverted, things will not last with this frothy mess. And that's certainly, I think, why the meme stocks are now starting to pull in. Again, take care, everybody. We'll see you on the charts tomorrow.